Hello, my name is Eric Iverson, and I am the Consumer Loan Officer and Branch Manager at our Watertown branch. For many people, buying a car is one of the first big purchases they make. If you haven't bought a car before, the process can be quite overwhelming. So let's walk through the basics to give you a place to start. Before we dive into the loan process, let's talk about the different parts of the loan. The principal amount, the down payment, the interest, and the term. If you're already familiar with loan basics, skip ahead using the time codes on the screen to the part of the video you would like to watch. The principal is the initial amount that you borrow. If you're borrowing $20,000 to buy the vehicle, the principal amount is $20,000. How quickly you can pay it off and how much you end up paying in the long run is based on a few different factors. The down payment is how much money you will pay up front for your loan. Most lenders will have a required percentage of the total vehicle cost that you are required to pay. You can speak with your local loan officer to find out how much that will be. Interest is the cost to borrow money. When we take out a loan, we agree to pay it back plus interest for the convenience of having the full amount at the time of the car purchase. The interest rate determines how much total interest you will pay over the life of the loan. The length of the loan, or the amount of time you have agreed to pay off the loan, is called the term. Each of these parts will affect how much money you pay back in the long term. A higher principal means you will be taking out more money. The more money you borrow, the more you have to pay back. A higher down payment will lower your principal since you are borrowing less money. A higher interest rate will not affect your principal, but it will mean you will have more interest to pay each month. You can lower your interest rate by improving your credit score, which is a reflection of your payment history. If you want to learn more about your credit score and how to boost it to get a better interest rate, check out our video on credit that we made with our Southside Branch Manager, Whitney. Finally, a longer term means that your monthly payments are lower, since you are spreading the payments out over a longer time frame. However, this gives the interest more time to accrue. So while you will be paying less each month, the total amount that you need to pay off the loan will be higher. If you want to see how this works, check out an article we offer through Bonsai in the description called What a Car Loan Costs. You can plug in different terms, down payments, vehicle prices, and interest rates to see how that affects your monthly payment and how much total interest you will pay. Remember, your monthly payment is a minimum to be made. By paying even just $20 extra each month on your payment, you could save hundreds of dollars in interest by the time your loan is paid off. When you pay more than the minimum, you help cut down on the principal amount. This means the interest will accrue on a smaller amount, so you will have less interest to pay over time. Now that we have the definitions in order, let's talk about where you should start when you're in the market for a new vehicle. It's natural to think about what kind of car you would like to drive first. But before that, think about how much you want your monthly payment to be and how much you will be able to afford for a down payment. You want to make sure that your auto loan payment fits comfortably within your budget. It's also a good idea to talk to your insurance agent about the insurance costs so the vehicle does not become unaffordable for you. If you need help making a budget, our Southside Branch Manager, Whitney, made a couple of videos on the basics of budgeting and how you can trim your budget once you have one. Next, it's a good idea to get pre-approved at your financial institution like FCCU. Our loan officers can help you make sure that your payments will be affordable, and they can answer any other questions that you may have. Getting pre-approved helps you secure the best interest rates possible and will give you stronger negotiating power when you are making the purchase. If you are buying from a dealer, it is a good idea to look over the inventory before you go. That way, you can schedule appointments to drive a few specific vehicles. This helps the dealer know what you are looking for in a car and helps you stay focused instead of trying to narrow down their entire inventory. Remember, this is your purchase. If you are not finding the vehicle you want, you can always walk away from the deal to find the right vehicle for you. If you are planning on trading in your vehicle when you buy a new one, look up the value of the trade ahead of time so you know how much to ask for. If you would like to look at a list of local auto dealers that we trust and recommend, check out our partners on screen now. You can also click the link in the description to learn more about them. If you are buying from a private seller, you want to make sure that there is not a lien on the vehicle. A lien is a legal claim to an asset that allows the holder to acquire it if the debts are not paid. This means that if someone has not been making their auto payments for a while, the lender may have legal ownership of the vehicle that they are trying to sell. If there is a lien on the title, you will need to get a payoff letter from the lender to make sure that you get a clear title when you make the purchase. If you have the vehicle's VIN or vehicle identification number, you can check to see if it is lien-free at wisconsindot.gov. Finally, look over the loan documents before you sign them and make sure you know what they mean. For example, many lenders offer 84-month loans. While this isn't a bad thing in itself, that means you will be making car payments for 7 years. Like we mentioned earlier, a longer term means lower monthly payments, but more total interest will be paid over the life of the loan. If you are buying a new car, it will come with a warranty. If you are buying a used car, it may still be covered by the original warranty depending on the mileage and the time since the original sale. There are 2 types of warranties. One that tells you what is covered and the other that tells you what is not covered. Make sure you understand what is included in your warranty and don't be afraid to ask questions. You may also purchase an extended warranty if you would like to be covered for a longer period of time. Gap insurance is an option that can protect you if you are in an accident and your vehicle is a total loss, meaning that the cost of repairs would actually be more expensive than the total value of the vehicle. If your insurance policy does not cover the entire cost of what you still owe on the loan, gap insurance will cover the cost for you. If you'd like to know more, we made an entire video about it with one of our member solution specialists, Teresa, that explains how it works. And that's everything you need to know to get started to make your vehicle purchase. At any point in your auto buying journey, feel free to give us a call to speak with one of our loan officers. There is a lot to know when it comes to this topic, but our loan officers are extremely knowledgeable and are happy to help you find the right vehicle. If you found this video helpful, check out our other videos in our Common Sense playlist, where we share advice on saving, spending, and everything credit. I've been Eric from FCCU, and we will see you next time.